And there you have it, your closing bell this Tuesday. Let's take a look at how the market settled as they accelerated their gains into the close. You see the Dow went up just shy of 400 points. They're up 1.2%. And you have the S&P 500, they're up 1.33%. And the tech-heavy NASDAQ also closing in similar territory, up 1.33%. And in terms of sector action, all green across the board this Tuesday. But for a closer look at the broader markets, let's bring in Morgan Stanley Private Wealth Advisor and Senior Vice President Jacqueline Remmen and Oxbow Advisors Managing Partner Ted Oakley. Good to have you both. So Jacqueline, I want to first start with you as we're sort of digesting what's been happening over this past month with earnings and what we've been seeing with different data coming out. What are your big takeaways?
Thanks so much for having me. It's great to be here. Our big takeaways right now are really just taking a step back in this really complex market environment and looking for opportunities to step into great companies that have, quite frankly, been crushed and represent awesome buying opportunities in our preferred sectors. Definitely an active stock pickers market and a great opportunity to increase income in the portfolio, which is the first time we've been able to do so in the course of several years for clients. So both, buying companies that have really been crushed and then also increasing income in the portfolio in our preferred sectors.
So Ted, what's your biggest takeaway from today's action, including the S&P up and over 4K, and will it stay there until year's end?
Well, it could, I suppose. Sometimes during that holiday period, you get some movement in the marketplaces. We don't think it's a long-term phenomenon by any stretch, but I suppose you could get a little bit more in here between now and Christmas.
Ted, how do you think this sets us up just in terms of what we'll likely hear from the Fed? Because lots of anticipation that we could get a 50 basis point hike at the next meeting, although it also sounds like 75 might still be on the table. What do you think?
Well, I'm thinking that people are underestimating them. I don't think Jay Powell wants to be the next Arthur Burns that let inflation get away from him. So I think he's decided to change stripes over the last 2 years, and now he's in a mode where he's going to make sure that inflation's not there. And you can't do it. I mean, everybody got excited about a quarter-point drop in the CPI, but if you look at the PCE, which is what they use, it hasn't broken much at all.
And Jacqueline, with the Fed obviously looking for consistency in these data points, how do you position yourself knowing that the Fed isn't going to be taking its foot off the gas yet, but you do have a lot of people trying to say inflation has peaked, that we're out of the woods, and you have a lot of different data points coming at you?
Yeah, and we believe at Morgan Stanley that inflation's peaked as well. We see it coming down over the course of the year. We're positioning clients defensively. We're still preferring those sectors that are more value-driven than growth-oriented, specifically healthcare, utilities, and consumer staples. And then also, buying into fixed income, specifically in municipals, in investment grade, and also in treasuries. And just more broadly speaking, what we're paying close attention to are the Fed statements tomorrow, and then also where we see rates go, over the next two cycles, both, in a couple of weeks and then in January.
Ted, you notice you say too much emphasis is being placed on the Fed. Why do you say that, and what are we not paying enough attention to?
Well, I think everybody wants to try to get the low in the market and the high in the interest rates. And they're not realizing that we're probably going to go into a couple of quarters of recession. And these companies are going to have poor earnings. I mean, there's a lot of headwind coming at them. And so instead of thinking about, I want to try to catch the Fed, everybody's living off what they did the last 10 years. And I don't think this time will be like that. I think it'll be more long drawn out, and you can't try to just, find out what are in the notes and what one of them said at a speech or something like that. I think you're going to have to be in a position to where you start to try to manage through those things. And, a lot of people today haven't been around during those things. I know it's hard for them to understand how to do that, but I think that's where we are.
Jacqueline, you mentioned you're favoring sectors that are more value-driven than growth-oriented. Are you seeing any opportunity, though, in some of those beaten-down growth names?
Yeah, absolutely. We have several companies that are 30 or 40% off of their highs with tremendous leadership. They offer good dividend yield, buyback opportunities, and have really efficient, strong cash flow with recurring revenue. And those are the types of companies that we're really looking to enter into in this, what we see as a good buying opportunity.
And Ted, I want to understand how you would characterize this earnings season that we're coming to the end of and what that means in terms of your outlook, given the macroeconomic background as well.
Well, if you look at forward earnings, the next 6 months, roughly 17 times in the S&P. That's too high if you think about what's going to happen to their earnings in the first 3 quarters of 23. So most of these companies I know they're down in price, but most of them are still overpriced relative to what they would be at the low in the market. And so I think people are going to get caught up, much as they did between 2000 and 03, where they would try to come in during 2000 and 01 and kept trying to find the bottom, but they never did. And it took another 18 months or so before you really got to the low in the market. It seems to be more like that this time around.
Jacqueline, your reaction to that statement?
Yeah, we think that there's definitely a profit reset, and we'll see that in the first quarter. That being said, for long-term investors, we think that there's really great opportunity to step in, remaining defensive for right now, but stepping into companies that present tremendous value, have good cash flow. And right now, really, while we wait in that time period of volatility, to increase the cash flow on your portfolio, which helps to stabilize returns, and talking to clients about really having that strategy to endure that volatility that we'll see over the next couple of months, which makes sense just given the profit reset that we're experiencing based on where we are in this cycle.
All right, we got some earnings just coming in, so we'll have to leave it there. Jacqueline Remmen and Ted Oakley, appreciate you both being here. Have a happy Thanksgiving. Thanks so much.